price action every single day. So every single day, price is either going to move up or down. It's going to move sideways. It's going to chop. It's going to accumulate. You're going to have small candles. You're going to have big candles. Price action and volume is like one of the first things I feel like you need to learn and you need to use. So with price action, you need to look at candlestick patterns. You need to understand the shapes of the candlesticks on the chart. So we'll just give an example. Look at a candlestick with something like this. Let's say we have a candlestick and a wick. Here's a big ass candlestick like this. This is a big candlestick, right? Decent sized candlestick. That is a candlestick that has actual like decent volume. What's good, Porter? Decent volume. That's a big candlestick. Now, when you see a candle like this, that is a candle that has a lot of volume in it. It's obviously a retarded ass candle, but you guys can see it. The candlestick has a shitload of volume in it. So when you see a candle that is very big with small wicks, that means that it has a lot of volume. They're candles that you want to look at for entries. So basically, if I show you on the chart, let's give an example. So let's see, we have this right here. This is straight just accumulation. This is accumulation. You don't want to be trading this. You don't want to be taking entries. You don't want to exit off of this. This is just chop. What can chop do? It can make you very emotional. It can make you very impatient. It can get you like just freaking your brain just running, and you don't want that. So when you see bad price action like this, you don't want to like act on hesitation. You simply want to wait for confirmation. You want to stay patient every time. You need to stay patient. So with this, you're waiting. Boom, you see a big candlestick like this. What does this represent? We just went over it. This represents high volume. What does that mean? It was accumulating. Orders were getting filled. Boom. You see a big push to the downside. What is that telling me? Okay, we just made a huge push with heavy selling volume. What happens? Boom, downtrend. That's just confirmation, and that is simply just volume. You guys need to know volume. You need to know what candles are big, what's small. Also, when you see a candle like this, you guys ever see candlesticks like this, like little doji candles like this right here? That's very low volume, crazy big wicks. You don't really want to trade that, right? You don't want to enter off of that. You don't want to that's not showing you anything. It's basically sideways price action. That's what I like to call it. When you see sideways price action and you see candlesticks like these, how can you take a trade off of that, right? Personally, I'm not taking a trade off of that. I'm looking for very high volume. I'm looking for high confluences to either exit or enter. Like you guys know, when I see heavy, like when my stop loss is about to hit and I see a big ass candle and it closes, sometimes I'm like, all right, I need to get out. You know what I mean? That's like not a good confirmation. That's when I'm not taking the trade if you've been on the lives. So when you see small candles like this, low volume, here, you guys can literally write this down. So here's like if I go like this, give me a second. I'm still getting used to the fucking computer. Been on the laptop for so long. So when you see a candlestick like this, very low volume, or this is high volume, okay? And then let's say we see a candlestick like this. That's like mediocre volume, right? That's a little bit of volume. That's a decent sized candle. And then when you see candles like this, when you see very small candles and big ass wicks, that is not a good sign. That's just very low volume. So it's as simple as that. You got right here high volume with this. I don't know why it didn't. High volume candle. Like, write all of these down. I'm telling you, it'll help you out a ton. Medium volume, and then right here, low volume. And that's what we really want to focus on. Low volume, right? Low volume is not good. It's not good at all. So when you see high volume like this and a huge candle, it shows you like, yo, that's a good confirmation, whether it's a break of structure, a good confirmation for like a liquidity sweep and then a close. It could be a good confirmation for a lot of things. Low candlesticks like this, like low volume candlesticks, they don't really show too much. The only thing that you can look for is a reversal. So when you see a doji candle like this is what that's called. A doji candle with very big wicks and a small body. The body is usually filled with volume, which means how much sellers or buyers are in that candle and are buying or selling at that time. And when it's low, why would you take a trade off of that? You need to write that down. Literally say, do not take a trade when I'm seeing low volume. You don't want to do that. It's as simple as that. You do not take a trade off of low volume. So let's give an example. Where is low volume? So like right here, are buyers in control? Are sellers in control? No. Nobody is in control right here. This is strictly just low volume. This is not going anywhere. It's called sideways price action. These are low volume candlesticks. What happens when you see, boom, big displacement, break of structure? That's telling me, okay, we're sweeping liquidity most likely. We saw that. Now let's go over to the 1 minute time frame. What happened? Remember, right here was the big candlestick. All right, we broke structure, retest, boom, there's your downtrend, and there's your trade for the day. Just because you saw a big volume candle, right? So when you see them big volume candles, that's why you want to take trades. Let's go over. So you guys know what volume is or no? In the chat, you guys are good. High volume you're taking trades off of, and we'll obviously go through good volume in exiting and entering trades too, because that's a very big thing. So when you see low volume, you're not taking a trade. High volume candlesticks, boom. You want to take trades off of that. So where's the, bang. So price action. Now we're going to go to price action. It's simple as that. Volume is very simple. It's whether you see a lot of buyers or a lot of sellers every single day. It's whether you see, okay, are we making an upside move or a downside move, or are we accumulating? So like write this down on your paper. So serious. If you see, let's say you have right here, say if the stock is doing this, no, you don't want to trade that. Like you can literally write this down, like draw this on your paper or whatever. Chop or accumulation. That's bad price action. That's not good. Then when you see this, what is this? That's higher lows and higher highs. That is very good price action. That is high candlesticks, right? Big candles, big moves. That's a lot of buying or selling pressure. That's good. This is called an uptrend. It's super fucking simple. You guys know what uptrends are. So, uptrend, very simple. And then the last thing is a downtrend. Good price action. It's going down. It's actually moving in a direction. So it's very easy. Very, very easy. That's a downtrend. Like, write this down in your paper. And the reason, why is he telling me trends? I already know this. So if you know this, then why are you trying to like go against the trend? Why are you not following the trend? Why are you not listening to your rules? You know what I mean? You need to know these things. You obviously don't know them enough. Stop being hard-headed and just actually listen and take this down and note this. Like, you need to write stuff down. That's how I remember all this stuff and learned it, because I wrote it all down every single day. So this is chop. This is accumulation. So when the stock is moving sideways like this, let's give an example. Boom. When the stock is going sideways, you can make no money off of that. Okay. Now let's go back to this. Okay. Downtrend. Can you make money off of, what the heck? Can you make money off of this? 100%. Look, big candles, moves, and lower lows and lower highs. So when you see a lower high, lower low, lower high, lower low, lower high, lower low, that's good price action. That means it's a downtrend. Same thing with the uptrend, bro. Can you make money with this? Yes. Lower high, like, bro, lower high, higher low, lower high, higher low. It's making a clear uptrend. It's good price action, and basically it's showing you that you can make money off of uptrends and downtrends. You can't make money off a chop. I'm getting off of this topic. You should know to stop trading when you see accumulation. It's not good. It's not good. So real quick, like, screenshot that. Simple. Boom. There you go. You don't want to trade in accumulation. It's simple as that. So with price action, and we're going to talk about price action, we went over the candlestick patterns. It's super simple, understanding the shapes of the candlesticks and volume. So now we're going to talk about support and resistance, identifying levels where the price has either struggled to go above the resistance or below the support. Support and resistance is huge with my strategy because, let's say with liquidity sweeps, break of structures. Break of structures is literally breaking support or breaking resistance. It's that simple. So you guys know what an uptrend is now. You guys know that an uptrend is higher lows, lower highs. Higher lows, lower highs. This is an uptrend. It's as simple as that. Very simple. Now, When we're looking at the break of structure, if you know what a break of structure is, boom, that's a break of structure. But let's go into what support is. So what is support? You see an uptrend like this. You see this lower high, higher low, lower high, higher low. You see that we're in an uptrend. You see it's going higher. All right, so what are we doing? We're supporting. Get your trend line. Can you guys see that right here? We are supporting this level. Support is a level to me. Basically, this level of support is telling me, look, that every time we come up, we come down, bouncing, bouncing, bouncing. We're bouncing off of this level. That is a support level that's telling us that price does not want to go to the downside, right? It's literally telling me that it does not want to go below support. It's struggling to go below this level. That's basically an indication that we're in an uptrend. So when we're looking to break structure, we can look for the break of support. Boom, broke structure, broke the support. That means that we're now probably going to go to the downside. That is how I do that. We'll go over that when we go on the break of structures. But that's support right here. We'll go over this. Support. Simple. Support line, there you go. This is support right here. Now, what is resistance? Resistance is very easy. It's the same thing. When you see a downtrend, lower highs, higher lows. Lower highs, higher lows. Literally vice versa. So this is support. This is resistance. A downtrend is resistance. You basically see the downtrend, right? You see the downtrend. This level, like this said, it said identifying levels where the price has struggled to go above resistance. Above the resistance. So this level is rejecting from price, and we can't go above this. Same with this. This can't go below this level. The level is the line. So when you see price cannot go above this level, that's saying it's resisting to go above, right? You see price come down, boom, rejection, 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 boom. Simple. It's that easy. You see resistance, you see support. Easy. Write this down, screenshot it. When you see resistance, price is struggling to go above. Like, write this down, obviously, like screenshot it, write it down as you're doing this, and then also write this down and understand it. And also, you're not going to like know it right after this class. You're not going to understand it fully. You need to study after. One day of this is not going to fucking do anything for you. You need to continue to see these notes and hear what I'm saying. Rewatch this video 100 times, and then also continue with the notes and apply yourself every single day. That is how you will actually make money and understand these concepts. It's simple. It is so simple, man. Too simple. Yes, Notion is goated. Notion is too goated. So, this is support and resistance. It's as simple as that. Jay, you got to DM me. So, and now the same thing with the trends. We recognize that already. Trend lines. For price action and to see good price action, you need to see trends. You need to see whether we're in that uptrend, that downtrend, or when we're chopping. You need to realize these. If you can't realize and you can't embrace and you can't be aware of price action, that will cause you to make no money. It will cause you to get hurt in trading, and it'll cause you to basically lose your money or take bad trades. Because if you're taking a trade in price action, we're in options, we have Greeks, there's theta, you can get chopped up. There's so many things that are bad about chop. So when you are witnessing bad price action and low volume, you don't trade. It's as simple as that. You do not trade. We wait for A+ setups only, and we only take setups when our whole entire strategy and plan align. It's as simple as that. So, trends, we got that. You guys got support and resistance, and you know candlesticks. Now, it's literally just price action. It's price action and chart patterns. Noticing repeated formations and shapes in price action movement. So, let's see basically this right here. Like, we can call this a double bottom. I like to call it this. Look at this trend line right here. Can you guys see that? Basically, we come down, and also, what is this? This is called support. Price is coming down, bouncing, bouncing, right? This is a very big bounce area. Look over here as well. It bounced 3 times. So when you see bouncing, bouncing, all right, we're coming down to it a 3rd time. We sweep liquidity, break structure, retest, bang. Could have called that trade. But when you see it bouncing like this, this is basically like a double bottom. Now this is resistance. Price is resisting to go above this. You see the resistance, boom, dumps. Over here, support, bang, tanks up. Easy, relative equal lows, exactly. It's equal lows, it is called support. Double bottom, whatever you like to call it, it is all the same thing. If a YouTuber is going to tell you one terminology, and then I tell you something different, and then they're like, bro, that doesn't mean that. They're stupid, don't listen to people like that. If they always think they're right, they're trying to teach you something that is just, they're just trying to wash your brain out, basically, bro. All of the shit does the fucking same. It all means the same. The market moves up or down every single day. Equal lows and a double bottom, bro. All of it's like, man, all of it is around the same thing. Support and, like, bro, like a support and like a supply zone. I feel like they're all around the same thing. It's just fucking names of wording it. Like an order block is literally a supply and a demand zone. That's literally what it is. Like, tell me I'm wrong. Nobody can tell me I'm wrong. Supply and demand is literally an area on the chart where a big move has happened, where big banks push price down. So when it comes back into that area, there's your trade. That is called a supply zone. This is called an order block. It is the same exact thing, and we will go over it, bro. So, you guys know price action. You guys know you need good technical analysis. You need good volume when to trade. Look, this is good volume. Big candlesticks to the downside, good volume. Good candlesticks to the upside, higher highs and higher lows. This right here, we're not making higher lows. We're literally going sideways. Are you trading right here? No, literally fucking delete that. You do not want to trade when you see that at all. Simple, man. And then also, market structure, looking at the overall highs and lows, looking at consolidations. It's all the same thing. Looking at when we're making highs, when we're making lows. Make sure you guys are understanding price action. Make sure you're understanding highs and lows. Whether we're making lower lows like a downtrend, it's simple, man. And then also, it's psychological stuff. You need to look at the psychological levels and basically how volume is reacting. So let's say down here at this support level, you guys see prices bouncing off of this area. We're steady bouncing off of this area. You see that, okay, we're huge selling. Tell me right here, this is a lot of sellers, right? We're selling, boom, we come to this level. Remember this big level right here? All of this is a big level. We're coming down. What happens? Are sellers still in control? Tell me, be honest. Are sellers in control right here? No. Sellers are slowing down. Buyers are starting to pick up. You see there's not a lot of selling pressure. Buyers are starting to pick up. Boom, break a structure. Uptrend. Simple. It is that simple. Once we make a market structure shift, also, if you remember, what is resistance? Downtrend. Once we break that resistance, what does that turn into? Resistance turns into support now. Now we're in an uptrend. What happens when support gets broken? Downtrend. Vice versa. It happens every single day. If you can catch these moves and switch on the time frames, you're able to catch these moves every day. It's that simple. So, we got that. We got price action out of the way. It's as simple as that. You guys know volume, you know price action. Super, super simple. Super simple. Now, we will start with liquidity. We're going to start with liquidity, and we're going to start with what is liquidity. In the market, boom, we're going to go to the higher time frames. So, what is liquidity in the market? What is equilibrium? We'll go over it. What is liquidity in the market? Basically, liquidity is resting orders and big money in the market. Big money as in banks. So every single day when big moves are made, like today to the downside, when these big moves are made, it's from the banks. Banks are putting millions and millions of dollars into these orders or into the market, and they're fucking pumping them, bro. That's why you see big moves. It's as simple as that. You're not going to see huge moves from us putting it in there. You know what I mean? It's very, very, very simple. Banks move the fucking market. So, banks are the market movers. They are moving the market with a ton of the money that they're putting in there. We're just retail traders following in the moves of the big money. So, liquidity is always sitting on the market somewhere above highs, below lows, because the start of every big move starts with the banks pushing up or down. So, let's give an example. Do you see today this huge downside move? Good price action today. Very big candles to the downside. You see this, and it's very important to see this. You see a liquidity sweep. and then boom, a big down movement. But you need to know what liquidity even is. So let's say up here at highs, do you guys understand on the 1 hour time frame? Do you see this high, this high, this high, this high, this high? You guys see all of these highs that are printed, right? All of these highs. Understand this. Like, look, there's a bunch of highs, right? Also, what is this? We just talked about it. What is this? Right here. Yes, you can call it that. We just were talking about it. No, opposite of that, brother. Support is when we're supporting something. It's resistance. So, support, remember, what is support? Where is it at? Where is it at? Where is it at? And there's nothing wrong with if you got it wrong. Keep fucking learning. That's the point of this thing. I think I deleted it. Support is literally when price is doing this. It's bouncing on this area, right? Like an uptrend. We're supporting. Now, a downtrend, that's resistance. So, when you see this happening right here, when you see it happen like 4 times, you see this huge zone right here. This is resistance, resistance, resistance. It's not going above that. Okay. At the start, or maybe not at the start, like up here, like right at 10 o'clock, you guys know that we don't need to, what's it called? We don't trade until 10. I do not trade until 10 o'clock. That's usually the reversal. 10 o'clock, reverse. You know what I mean? I was just taking another trade today, and then I tried to catch the reversal down here. I was wrong. I learned from it. Simple as that, bro. We're going to fucking learn every day. I literally lost this trade today. But I realized, and now we're learning. Now, next time, we're going to catch this whole fucking move. That's the part about trading. You need to learn every single day. So, when you see it come up, which was on the 5-minute, but on the hourly, it looks like this. You know that we're tapping into an order block over here. We'll go over that, but there's an order block all the way over here. Also, we have all of this resistance. Okay, we start to break out of this resistance up here. But then we close the hourly candle right all the way down here. The first hourly candle closes, boom, under all of these highs. What does that mean? That liquidity just got swept. Now, what is liquidity? It's big banks, it's big market movers in the market that are moving these prices. So liquidity is literally a lot of money in the market that is getting pushed either up or down. So when we come up and we have a sell-off, there's liquidity above this high. Why? Listen very, very carefully. When people go short around this area, they're putting their stop losses at highs, at the top of the trend. So what happens when price comes up? It stops people's out. It stops what out? It stops orders out. All of the orders are getting stopped out. What does that mean? All of the liquidity is getting taken, stops the people out. When that order gets sold, the banks have their orders already filled up here, like ready to get filled. All of the orders put tons of money in there to push price in the opposite direction. And that's exactly what happened. We have this high. We know that people have stop losses up there. There's orders up here. So when it comes up, it takes out all the liquidity. Orders get filled from the banks. Boom. Opposite direction. Bang. We love to see it, and we move off of liquidity every single day. It's that simple. So what is a liquidity sweep now? You know what liquidity is. It's simple. It's simply just below lows and above highs. Like, look, right here. Okay, let's see it. Oh, low right here. Let me make this larger. Low right here. Sweep. Uptrend, bro. Simple. Okay. Like, up here. Highs, resistance, sweep, downtrend. Low, sweep, uptrend. Lows, sweep, uptrend. Like, it's that simple. It's that simple. Now, don't just look at any sweep and take it. You need to go along with the trend, or if you're trying to catch a reversal, you need to be looking at the higher time frame confluences, like fair value gaps, like order blocks, like certain support or resistance levels. That's how you can catch reversals. But if you want to go to the upside, you gotta like see whether we're in an uptrend or a downtrend. Like, this is an uptrend. Okay, we had a little retracement, sweeping more liquidity, because every trend is gonna have a pullback. Remember, when a trend is like this, what do you think these pullbacks are when it sells off? People are selling off to buy again to fill more orders. Boom. Okay, people are selling, people are buying again. Boom. They're always trying to buy low and sell high. That is how the trends are moving, and that's how people make money. In uptrends, you don't want to buy high. That's when people are selling. So when we're already we're already overbought, you want to wait for the sell-off. You wait for liquidity to get swept. wait for your other confirmations, and boom, you're taking orders or you're taking buys or sells off of the liquidity sweep, break of structure, fair value gap, or order block. So what is a liquidity sweep? We basically went over it. The liquidity sweep is when the price comes to the area where the big money is sitting at. Remember, above the highs or below the lows, because people's stop losses are up there, big orders are up there. They're waiting to get filled by the banks. They want to make a big push down. So when it comes to that place and when that price point gets hit, it takes people out of the market, known as that stop loss raid. We talked about that. When liquidity is swept, it takes those people out of the market. That makes liquidity sweeps. It gives all of those banks a bunch of orders to fill, to go to the opposite direction. We're going to go over a break of structure right after this, literally. So a high gets swept, downtrend. Simple. And you see that we're coming into an order block. We're going to go over that as well. And remember, guys, this is hard as fuck. I know you're confused. You're sitting there. Remember when you tried businesses like 3 months ago or last year? Remember when you tried doing that? And you quit? You're not good at it because you quit. Please do not quit on yourself. Personally, me, I obviously don't want you to quit, but I don't give a fuck. It's your life. You live the life that you choose. Simple. You live the life that you choose. If you quit this shit because it's hard, you obviously don't want it. I know it's hard. Keep studying. We're going to do more classes. It's hard. It's not going to be too easy. So when you see the order block up here, it's so easy. You see an order block, it's sweep, break of structure, bam, you could have caught this whole move. One of my good friends, best friends, made $2,000 today, and he just started trading 2 months ago. 2 months ago. And he's banking. You know what I mean? Like, that just shows you that this strategy is so effective. It's so good. So when you see a high getting swept out, all of these orders get swept out, boom, push to the opposite direction. Let's give another example. Down here, okay, we're slowing down. You know we have this low, this low, this low. We have all of this liquidity down here. We come down, sweep out these lows, break structure, boom, now we're in an uptrend. You guys all go with liquidity. Does everyone know what liquidity is? It's simple. It's just big banks in the market that push price to the opposite direction when it wants to take orders out above highs and below lows. Everyone got it? Write it down. Okay, hope people got it. Boom. We'll go over order blocks now. Or not order blocks, I'm sorry. A break of structure. So what is a break of structure? The key points to a break of structure are basically, it's a trend reversal. It's simply, when you see an uptrend, how you always ask yourself, bro, how can I know like when it's going to go to the downside? Like, when do I know that? How do I know that shit? This is how you're going to know. When you can identify a market structure shift / as known as a break of structure. So it's basically a trend reversal. The break of structure often signals a potential reversal in the trend. For example, if a stock has been in an uptrend with higher highs and higher lows, a break of structure could occur when price forms a lower low, indicating a shift. Simple, man. Simple. Let's give an example. So we have an uptrend. We have a high. Wait, actually, isn't there a tool where I can use where it's like a line? I'm pretty sure. Is it this, the path? So we have a high, low, boom, boom, boom. Is break of structure continuation? No, it is not. It's a reversal in the market. So what is this? This is obviously an uptrend. You have a higher low and a lower high. Higher low, lower high. Remember what it said. A break of structure and a market structure shift, when you see the trend shifting, it's what? It's when, say, if we're in an uptrend and we're making those higher highs. So what is this doing? This is making higher highs. Now, when we see price form a lower low and a lower high, that indicates the shift. So this is the low right here, right? We have our low. How do we know when we break structure? When we break structure, is it this? When we come down and then go back up? That's not a break of structure. That's just a bounce. That's just going to probably continue to go up, right? That's simple. When you see a break of structure, boom, That is a break of structure. How else can you see and realize that it's a break of structure? What did we go over? The support. Remember that. This is our support level. When we break the support and we break the recent low, that is telling me it's a break of structure. You need to make sure that price is closing below too. Remember, just because it comes below and the candlestick is still live and open, that does not mean it's a break of structure. You simply need to identify it once it closes. Does that make sense? You need to see the close of the break of structure. Now, Goon Trades just asked me, what time frame are the best for break of structures? Brother, every time frame. There is no certain time frame. It's every time frame you need to identify what a break of structure is. But what is the most powerful one? What can I say? How can you determine your daily bias? The 1 hour and the 4 hour. Once you can understand when the 4 hour break structure or the 1 hour break structure, that's how you will be able to understand where the price is going to go by the end of the day. Higher time frame, higher power. Simple. So when you see a low, high, low, high, low, high, did we see another low and a high? No, we saw a lower low. This time we literally saw a lower low. Now what is price going to want to do? May want to retrace back up into our order block or fair value gap and then go down. And that's how you catch the very top of that uptrend from seeing a break of structure. Let's go over it to the upside. So when you see a downtrend, we have we have lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Now what do we have to do to break structure? We need to make a higher high. So where would our break of structure be? Right here. Simple. This would be our break of structure. Boom. Now, to see us break structure, we go up. Boom. Did we just make a lower? Why is this being retarded? Is this breaking structure? No, that's not breaking structure. Boom. That is a break of structure, breaking the recent highs. Also known as breaking resistance. Am I right? Do you guys remember that? You guys remember when we were talking about the support and resistance and understanding, is market structure shift the same? The exact same, brother. The exact same. Just because it breaks that one doesn't mean it will continue to go up. So, not every time. The way that you see if it actually wants to continue to the upside, so you look for the break of structure, then you don't just enter off of a break of structure. What did we talk about? You're never entering at highs to go higher. You always wait for pullbacks, because in trends are going up, coming down, going up, going down. So what do you want to do? You want to get in at lows to sell at highs. Am I right? You don't want to get in at highs and potentially let it go higher, because then it could just dump on you, get stopped out, and then go higher. Make sense? You enter at lows, sell at highs. So this is a high, correct? No. Yes. So when you see this high right here, you're like, all right, you're not entering, but you see the break of structure. Then you wait for the pullback. You wait for good volume. Remember, volume is everything. You wait for the premium or the discount. Yes, we'll go over that. You wait for good volume. You never see me, oh, fair value got tapped, I'm entering right away. I always like to see a good reaction. Because have you guys ever entered in a fair value gap and then it just fucking dumps right away? Be honest. Yes, you probably have. You probably say, oh, a fair value gap, I'm going to enter. You enter, and then it just hits your stop loss right away. Because you never waited for our good price action and good volume. You never waited. You never waited for a good candlestick entry. You never waited to see whether it was chopping, whether it was bad volume. You know what I mean? If you want to go higher and you're trying to take calls, you know what I mean? It's that simple, to the point where, like, if you are not waiting for price action to form, you're basically just, I wouldn't say gambling, but you're just like hoping. You know what I mean? Always wait for the candle to close to be sure. Yes, exactly, Rye. So you need to make sure that the candlestick is closing above that recent high for it to be a break of structure. Then you wait for the pullback to either the fair value gap or an order block. Boom. Then you target this liquidity, this liquidity, this liquidity. You guys ever see me when I'm taking my or when I'm setting my take profits? It's either at highs or lows. You know why? Because what's above highs and lows? Orders, liquidity. Yes, good job. Good job. There is liquidity right here. So what does that mean? That price could easily come up to these points of interest, and then dump. So I'm securing bread, securing green. I'm taking that shit. I'm taking it. I'm a stripper. You feel me? I'm taking that shit. All right here. See the high? It comes up to it. Boom. One contract filmed. Boom. One contract filmed. Filled. You always are trimming your contracts. You're selling orders, whatever you trade, futures, forex, options. At these points of interest up here, you're always trimming your contracts. Simple. You're trimming during all that, correct? 100%. So as soon as I enter and I see my first take profit hit, trimming. Second take profit hit, trimming. Third, trimming. And it's always different. You know what I mean? You're not going to take profits the same every time. It's depending how price action and how volume work. Let's say you're in an up. Let's say right here, your first take profit is right here. Let's say, okay, you're very confident it's going to go up. And this is what price looks like. All right, I'm only trimming one contract right here because it looks pretty good. But let's say you see this. It comes up to your take profit because what's your take profit at? Someone tell me real quick. Someone tell me. Think. Your take profit is at liquidity. Good job, Will. So it's at liquidity. So right here, if you see price doing this, it could dump. So what you need to be doing, what I do at least, is I'm taking like 2 to 3 contracts off right there, depending on how much you have. But like when I see price action, remember, what's price action? What is this? Buyers are in control. What is this? Buyers are losing control. So when buyers lose control, who steps in? Sellers. That means it's chopping. Buyers are losing control. Sellers might step in. It might dump. You need to be securing bread. You need to be a fucking prostitute with this sheet. You need to take that shit, get that head, get that bread, then leave, peace out type shit. You feel me? You need to fucking not let your green go to red. It's that fucking simple, bro. It is that simple. Simple. Alright, he feels me. Alright, bet. Cool. You guys understand what liquidity is. You guys understand what break of structures are. Boom. A break of structure is literally, and also, like we said, it can also refer to support and resistance levels. If the price breaks below a certain level, it will suggest a bearish change. If it breaks support, if it breaks an uptrend, that's telling me we want to go to the downside. Now, vice versa. If we have resistance and we're in a downtrend and it breaks resistance, that's a bullish trend. That's a break of structure. So we'll go over the break of structure again really quick. Just write it down. No, the doc is not shared. I'm not sharing any of my docs. Write it down, screenshot it. This will be recorded. So when we see a downtrend, what is a downtrend? Someone tell me in the chat. What is a downtrend? In level-wise. No, Lukey. So resistance. So a downtrend, Lukey, and there's no problem. I'm glad that you're wrong because now I can tell the people in the back. When you see a downtrend, guys, a downtrend is resisting. Guys, it's resisting to go above this level. You got to write it down. Resisting. Look, I'll put the R. Resisting. It's resisting to go above this. It is resisting, guys. So when we see a downtrend like this and we see the support, how can we tell whether we're breaking structure or not? It's as simple as this. What do you see? You wait for the recent high to get... Actually, this is dog shit. Fucking... I gotta draw them slower. So, you see resistance. You see all of these highs. You see we're resisting to go above this area. Now, what are you waiting for? You're waiting for simply a break of what? A break of the resistance and a break of the recent high. That's how you know we broke structure. That's how you can catch the trend. You wait for a big impulse move, and usually when you see a break of structure, does anybody know what a break of structure is made from? Can anybody tell me? Does anyone know? What is the first thing that happens that we first talked about that pushes the orders very largely? The banks. But what? Sweeps, yes, I'm looking for that one word. What is liquidity? Yes. Who said it? Good shit, right. So, the first thing that happens is liquidity. So, let's say we have lows over here. Let's say we have lows. What's the first thing that happened? Sweep liquidity. All of the orders get filled. Banks are filling their orders. Boom! Break of structure. Breaking the recent high. Breaking the resistance. That's how you can see whether we're going to go into the trends. Okay, right. Yes, sir. Exactly. See you guys. If you're watching this video, guys, also, I'm responding to the chat. So if you're watching this from YouTube right now, keep fucking watching it. How long are we in? Fucking already an hour, and I'm not even halfway done. So, look at you guys. We're going crazy. This is for the YouTube video. Everyone's learning. Let's go. We're cashing. Make sure you continue to watch. Keep doing good. Pat yourself on the back. Fucking let's go. So, resistance. You see the break of structure when we break the recent high, when we break resistance. Now, support, when we're in an uptrend like this. When you see an uptrend like this, it's that simple. You see how this is support? Look. Lows. Do you see how it supports off of this level? Every time it comes back, support. Easy. It's that simple. It's supporting off of this area, and price is bouncing. I like to call this bounce. I like to call this reject. So this is a rejection. The other one is bounce. Okay. Boom. You guys know what a break of structure is. Everyone for the chat, do we know what a break of structure is? Everyone know. For the YouTube video, does everyone know? Yes, okay. You sure? You promise? You know when we're breaking resistance, you know when we're breaking support. Okay. Good job. Write this down. Well, don't write it down right now. If you did, good job. But if you didn't, just take a picture of it, screenshot it, whatever you got to do. What about market structure shift, brother? That is the same thing, my guy. Same thing. A market structure shift is a shift in the trend, and a break of structure is a shift of structure. Break of structure, market structure shift, same thing. A break and a shift, it's the same thing. You know what I mean? Like, say, let's give an example for basketball. You're shifty as hell. You're breaking ankles. Right? Tell me that's not a W analogy. A break and a shift, same thing. You're either shifty or you're breaking it. You feel me? Come on. You guys good? Market structure shift, break of structure, same thing. Everyone get that through your head. Because like I said before, if you were listening, YouTubers, TikTokers, everyone likes to call these things their own names. You know what I mean, right? Like, come on. Everyone has their own words for stuff. Let's get it. Happy birthday, brother. All right. That's a break of structure. Now we're going to go over a fair value gap. What is a fair value gap? A fair value gap is a retracement tool. It is an inefficiency in the market. These fair value gaps arise when buying or selling pressure are significant, resulting in a large upward or downward move, leaving behind a fair value gap in the market where price will want to revisit and pull back to. So let's go over it. I'm sure you guys know what a fair value gap is. It's as simple as a 3-candle formation. You have 3 candles. Let's say this is an uptrend, right? You have a 3-candle formation. This is an uptrend. Let's say you have wicks. I'll draw the wicks. Boom. Here's a 3-candle formation. You guys see this? You guys see this every day when you're trading, right? When you're trading, you see candles going to the upside. Now, what is a fair value gap? A fair value gap is simply from so now this is a bullish fair value gap. This is a bullish fair value gap. I'm going to type this up here. Bullish fair value gap. Bro, I must be weird and gay. Oh my god. Bullish fair value gap. Simple. This fair value gap is simply from the top of the bottom candle, the top wick from the bottom candle, to the bottom of the top candle. You guys understand this, right? Do you see that within this box right here, within this price range right here, it comes to the bottom of this wick, comes to the top of this wick. We're not worried about these wicks for now if they look like that, if it makes a gap. But if these wicks look like this, is this a gap? Is this a fair value gap? No. Why? Because there is no gap and there is no orders, there is no inefficiency in the market, because all of these orders were already filled from the candles and from the wicks. Simple, right? So when it looks like this and there's no, do you see how like there's no wicks? It's simply just a gap. There's nothing inside of here. Nothing. There's nothing inside of there. That means it's an inefficiency, and it is called an imbalance or a fair value gap. It is all the same fucking thing for everybody that thinks they're all different terms. It is all the same thing. It's all the same thing. This is a fair value gap. It's an inefficiency. So what is price going to want to do when it, boom, big impulse move? There's orders, resting orders, like limit orders, like people that have not got their orders filled. Have you ever gotten a trade and it didn't fill your order? Sometimes that happens. It's an inefficiency in the market. There's still orders that want to get filled in this area. So when price maybe is all the way up here, remember it's a bullish fair value gap. Say the next candle closes down here, comes into it, fills those orders. Remember, banks and institutions at liquidity, literally an inefficiency is orders. What is orders? Orders are liquidity. So when there's a bunch of orders in here and price comes back into this, it'll fill these orders to continue the uptrend. And that's how you catch the bottom moves of an uptrend. So every pullback is most likely a pullback to collect more orders, fill them, either sweep liquidity or take out liquidity to go to the opposite direction. Does that make sense? I feel like that's the best way I could explain that. Every time you see a fair value gap, it wants to come back into it. Now it could easily disrespect it. So you want to see good volume though. Are we entering right here? Negative. We want to see either price action slow down. That's good. And then we want to see maybe an up candle. Boom. We're entering off of that stop loss like down here. There you go. Boom. Boom. Max, you're the GOAT, brother. I appreciate it. That is a bullish fair value gap. You guys understand that? Take a fucking screenshot, write it down, do what you have to do. That is what a fair value gap looks like. Let's fucking give an example right here. Right here. Remember, we're going to do an example. Do you guys need me to do break of structure examples on here too? I'm sure you guys do. I didn't do that. I'm sorry about that. Top of this wick, or the bottom of this wick, I'm sorry. Bottom of this wick to the top of this wick right here. So it's a 3-candle formation. Remember, they don't always have to be straight green or straight red or straight any color. It doesn't matter what fucking color it is. We like them all, right? We like them all, guys. So 1 candle, 2 candle, 3 candle. You got the top of this wick to the bottom of this wick. Price comes down, dips into it, dips into it. And remember, this is on the hourly time frames, so it's different, but dips into it. What happens? Fucking prints. Prince, man. Like, I can give you guys so many fair value gaps. This is on the hourly, though. Here's a bearish one. Fair value gap. Price comes up into it. Closes below this low. Downtrend. Do you use inverse? Of course I do, brother. We'll go over that, too. So, do you guys have a picture of the fair value gaps? Cool. It's the same thing on the downside move. This is very easy. There you go. Boom. Boom. Remember, it's the wicks. If we had wicks, remember, they can't be overlapping. So these wicks can't be like big. If it's big, what does that mean? Orders were already filled. So it's usually that gap in between those candles. If we're in a downtrend, price will want to come back up, fill more orders to continue to go down. Simple as that. You obviously have to put all these things together. This one class will not teach you all of that. I wish it would. We would have to be here for more than 12 hours. More than 20 hours, more than 40 hours if you want to learn it and master it. It's simple. You can't just learn it off of one class. So take this in, join the free Discord every morning, keep applying it. I'm gonna start doing classes all the time. We're gonna get fucking we're gonna get right this summer. Do I use fibs? I don't use equilibrium too much sometimes though. So does everyone in the chat understand what a fair value gap is? Everyone good? We're good. Okay. No questions? You guys okay? Okay, now real quick to go back to the break of structures, because I know that I did not give a live demonstration of it. So, you know we were sweeping liquidity up there. We have a high, low, and we broke this low right here. So, this would have been the break of structure right here. Now, it wasn't an impulse move, but it was a break of structure, and a break of structure counts. So, we made a low, made a high. Did we close below this low? No. Now, this is the recent low. Did this low close below this low? Nope. Now, this is the recent low. Did this candle close below this low? Yes, this black candle did close below the low. So then, after that break of structure, you can go into like the 1 minute time frame. Boom, break structure, retests. Enter, bro. You're making weird money. Weird money. But it's not a higher high. Yeah, weird money. So, you have the high, low, high, low. It doesn't have to necessarily be a higher high. You just have to look for the recent lows. Retraced, dumped. Like the same thing with this. Broke the trend. Thank you, Max. Broke the trend. Boom. Broke recent highs, swing highs. So I would look at this as a swing high. There's your uptrend. It's not always hitting every confluence. What do you mean by that? So the break of structure is literally just seeing the trend and breaking it. Personally, me, I don't think I would have taken this break. I would want to see the impulse move. Show that with the EMAs. Yeah, I'm going to show the EMAs. The EMAs are great. How do we tell when an order block? These are all good questions. I can't, obviously, I don't want to mix it up too much. I don't want to answer too much things. I want to make sure I'm going in order so everyone kind of, because remember, you have to do these things in order. You have to do everything in order. Like, it has to be first, you see the bias, then you see good price action, then you see the liquidity sweep, the break of structure, then the retracement, good volume out of that. Like, it's all like, bro, it's all fucking, it takes time. Now, you're not going to understand it right away. You're not going to understand it off of the first video. It takes practice. Practice makes perfect, guys. You need to do this on the regular. One day will not fucking do anything. So, we broke structure to the downside, retested right here, and we retested on like the 3 minute, the 1 minute. We retested so many times. Downtrend. It's that simple. An uptrend break of structure will go on the 5 minute because I like to see my break of structures on the 5 minute most of the time. Right here, I would have looked at the trend. I would have looked at the break of resistance right here. Simple. Once we broke resistance, if I go over here, once we broke resistance right here, we retested this fair value gap and good volume. Stop loss would have been up here. Printed. See that, right? You understand. It's very simple. Very, very simple, man. Like, I'll go over another break of structure. A break in trend. Let's go to fucking Amazon. I'll go to a random stock. I'll show you. So, let's go to today. Boom, okay, we come up. Remember, 10 o'clock hits. We sweep liquidity. Made a low. High. Boom. Broke this low. Also, what did we break? We broke support. Look, see, it's supporting. Boom, made a lower low. And we broke the trend. Okay, let's go to the 1 minute time frame. I like to take my entries off the 1 minute most of the time. We broke it, retest this fair value gap to a T right here. Also retested the break of structure. Actually, we closed above it, but we retested. If anything, we retested. You could have taken it right there. Personally, there might be a 3 minute. Let's check. That 1 minute did close above, so I don't think I would have taken that. But yeah, right here, perfect. Yep, I knew it was a 3 minute. If the 1 minute never works out, I go right to the 3 minute. Obviously, I explain all this more in depth with my inner circle, but the gap right here comes and get retraced into 3 minute gap. Remember, if the 1 minute gap doesn't look right, look at the 3 minute. Comes all the way up, closes all the way down here. You guys see that? Look at that price action. We see a candle, or we see the fair value gap after the break of structure, the retest comes up, closes bearish, closes a red candle. Boom! Fucking money. Money. We're eating steaks tonight, dog. Straight up steaks. It's simple. So you guys know what the break of structure is. You guys know what a fair value gap is. You guys know what liquidity. We look at them in a row. So the first thing you need to look at is the daily bias. Then the liquidity sweep, the break of structure, then the fair value gap. There's a lot more that goes into it. I like to look at the EMAs. We'll go over the EMAs after. That's one of the last things I'll go over for the strategy, because I can't give you guys all of it right in a call. But let's go over an order block. Great order block setup on the higher time frames. Remember, higher time frames are higher powered. So on SPY today, 4 hour time frame, we came up close to all-time highs, right? What is your usual risk to reward? So I just have a max loss on the day, brother. I don't really do that like 1-to-6 ratio, 2.2. Like I just don't do all the math like that. Personally, me, I have a max loss on the day. I make sure I have a good risk to reward setup, meaning to me, close to lows or highs, because I enter close to liquidity. Liquidity is the biggest thing that drives the market, and I literally get in at the bottom of liquidity sweeps. So if it breaks and goes below my stop loss, that means I'm wrong. Like today, I didn't peep this trade. I wasn't fully focused on this, and I entered right here. It broke the trend, broke the lows where we swept, and it continued to go down. Imagine if you stayed in this trade. You would have lost all your money. That's why I love my strategy, and I think this is the most effective strategy ever, because when you do get stopped out, it means that you're wrong, bro. So stop yourself out, or you will lose your money and lose your whole account. It's that simple. You got to have that type of mindset. So 4 hour order block. What is an order block? I don't even have it written down on here. Do I? No, I don't. Okay, so I'm just going to tell you guys. Actually, no, we can write it down. What is an order block? So an order block is literally the same thing as liquidity. It is, how can I type this out? I usually got to think, but I could say a order block is a level where price has rejected heavily in the past. Simple. An order block is a level where price has rejected heavily in the past. So if we see right here, price comes up, rejects heavily, very, very heavily. So what is an order block? An order block is the recent down candle to an uptrend. That is a bullish order block. Now, a bearish order block is a recent up candle to a big downside move. So you guys see this green candle right here. This green candle move up to the big downside move. That is an order block. This is the order block. Why is it a big level? Why is it an order block? Because it's the accumulation candle that filled all of the orders from the banks to the big push down. So you know up here was a lot of orders were placed. When orders are placed, what does that mean? Orders are left behind to get filled. Why do so many people use the bodies? I have no clue. I like the wicks. The wicks work for me, my guy. Everyone does their own thing. That's the thing with trading. Someone just asked in the chat, guys, why do people use wicks? Do what works for you, brother. Like, I bet you I can find one right now that didn't hit the body and only hit the wick. Let's give an example. Right here. Thank you. So let's say we only use the body on this. Did it hit the order block or no? No. I know, Max. I know. I'm just giving an example. Did it hit it? Neggy. Now, did it hit it? Fair value gap and order block. Bang. Easy. I like to use the wicks personally. The candlesticks work too. Candlesticks work too, dude. So, an order block was this up candle to the big down moves. You can see we came up here. So, if we're looking at this trade, you see we come up to the order block. Also, what are we doing? We're sweeping out a high. Okay, let's go to the 1 hour. Let's go to the 1 hour. What's the 1 hour doing? Oh my God, we have so much resistance up here. I'm using terms that we literally just learned. So much resistance, so much resistance. Okay, we come above this. We sweep all of the liquidity out. Okay, now we have to drop down to the 5-minute time frame. Okay, you know this is a liquidity sweep. Boom, break of structure. Holy shit, we just made that market structure shift. We just made a very big impulse move down. Okay, let's see. Retesting the fair value gap, bang. Retesting the fair value gap, bang. You're entering. Stop loss. Bang. There's your trade. And you would have absolutely banked. That looks like a Shrek wiener on my fucking screen. Come on. Beautiful entry. And I don't know how I didn't take this. I was looking at, what was I looking at? I think it was IWM. I forget. But, dude, it's that simple. Like, when you see these trades, when you see all of your confluences align, it's so simple. You guys need to learn this stuff. Exactly. The bias was bullish. Because I didn't see that 4 hour fit. I did not look at it. I was on my laptop and I didn't see the huge all-time high order block. Trading, it'll be all recorded, brother. How do you find your setup so well? You want to know the real answer? Yup, exactly. You just said it yourself, man. It is market experience. So if you're having troubles, you're not understanding, you can't get mad at yourself. That's like asking yourself why you are not better than Steph Curry at basketball, brother. You need to get experience. If you do not have a student's mindset, if you're not willing to invest in yourself, if you're not willing to learn, if you're not willing to put the fucking time in to your business and actually educate yourself and do it the right way, you will never do it. Market open and market close, Rye. I'm ready to lock the fuck in. I love it. I love it. Tell yourself that. If you're watching this YouTube video or if you are in the live right this second, tell yourself, listen, say your name and then say, I know this is hard. This shit is hard. I want to prove myself right. I don't care about proving people wrong. I just want to live a successful life. I just want to live a life where I can live in freedom. I need to start putting my money into things that actually benefit me. I need to stop smoking weed. I need to stop going out. I need to stop doing bad habits. I need to hang around right people. I need to fucking work hard, man. I need to work hard. Yes, I'm recording the class, Gavin. You know what I mean? You need to invest in yourself. Invest in Johnny. I love it, bro. But you need to. Yeah, so many motherfuckers partying right now. It's fucking 7 o'clock on a Friday. Guys, not to have it, not to sound cocky or nothing. I got girls asking me to go drink right now. I got, you know what I mean? I got people that want to hang. I got bars I could go to. I got, people playing, you know what I mean? And what do I have to say? I send them a fucking picture. I don't even respond. I don't. I stopped responding to my friends, guys. I stopped. You know what I do? Yo, come drink with the boys. I literally just do this. I send a picture of my computer, and I put my phone down. They can't respond to that. You can't. And if you respond to, bro, just finish it tomorrow, that's not a real friend. Get them the fuck... That is not a real friend. You need to get them out. It's as simple as that. Wes, you got to fix that, man. You got to fix that, brother. Sorry to hear that. But, man, you got to give up the short-term fun times for long-term financial freedom. Johnny, do a class on how to get ass. Shit. You just got to learn how to talk, brother. You got to make sure you present yourself well. You got to make sure you're a good talker. You're very genuine. You're nice. You're transparent. You're not a fucking weirdo. You know what I mean? You don't text girls weird shit. You just gotta be you, bro. You just gotta talk nice. Like me, I'm just very nice to girls. I just be myself. I try to dress very nice. I try to present myself well. It's always nice, bro. Simple. And the bitches come to me. Or the girls. I gotta stop saying bitches. That's one thing I gotta fix. I don't like when I say that shit. But, alright. Let's get back to that. Let's not talk about that. That's the last thing we want to fucking talk about. You know what I mean? But, our order block. Up candle. Or you can look at the accumulation zone. So me, I'm looking at like, okay, it could be this accumulation zone up here. It could be the last up candle and accumulation zone to the big downtrend. Comes up, sweeps liquidity, break structure, hold downside move. Hold downside move. So, you know what an order block is now. Let's look at a bullish order block on like the 1 hour time frame. So, right here, we have a down candle to a break of structure. Breaking recent highs, breaking structure, retest, order block, uptrend. You guys see, right? Motherfucker talking to a bot. I'm trying to say it slow. Bro, what is this dumbass bot saying? Look at this shit, bro. Yo, this shit is talking. Yo, what is good with it? It's actually tweaking me out. Yeah, how do I ban this shit? Fuck this bot. How do I ban him? Yeah, kick this shit. Fuck that bot. Fuck him. Yeah, that shit's creepy. That shit's tweaking me out. Alright. Enough messing around. I fucking hate wasting time. I take my time very seriously. I have another meeting after this, and I have a lot of stuff to do. So, you guys understand liquidity, break of structures, fair value gaps. I can't tell you all of it. Of course, I don't have enough time. But it's as simple as knowing these steps. Now, let's go over. I'm going to give you guys something. A lot of the OGs probably have this. If you're not an OG, you're going to love this. No, my Notion's not on here. Fuck. Are you serious, bro? Damn. Does anyone have my, what's it called in here? My trading checklist? I know someone has it. Someone be goated. Send the screenshot. Notion's quick login? Bro, I don't feel like doing all that right now. I don't got time. Fucking goat. Alright, guys. I can't really see this, but freak. Can I open this in browser? Alright. I know this is a crazy... You can't see it right now, but we'll go over it. How do I zoom in? Does anyone know how to zoom in? Woohoo! Let's get it! Alright. So, this is my trading plan / checklist. Trading plan / checklist, bro. This is what I do and what I look at every single day for me to take a trade. So the first thing that we do is we identify the trend on a higher time frame and we see what direction we're heading in. Okay. Today, we were in an uptrend, but we broke structure to the downside. We broke this recent low. What does that mean? We had resistance, and we broke it. Doesn't have to be perfect, but boom, resistance, and we broke it. Simple. Oh, right here. I'm sorry. Boom. Uptrend, uptrend, uptrend. Sweep. Boom. Break. Okay, we came back up. Swept liquidity again. We broke down again. So, the higher time frame, look what trend we're heading in, or look what confluences we could bounce off of. So, always, 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 you're looking at the higher time frames. You're looking at the higher time frames. What level are we coming up to? Are we coming to an order block? Are we bearish? Are we bullish? Are we going to reject off of this? Bang. It's as simple as that. So that's the first thing. You need to look at your daily bias. That is the very first thing, is daily bias. I'm going to send a screenshot of the actual thing so you guys can write this down, or write it down on Notion. Like, you need to write this down. Pause the video and write this down. So I identify the trend. I see where we're coming into. So up here, I'm like, all right, it looks like we're in an uptrend, but what are we coming to? We're coming to a huge order block that we could potentially reject off of. So the next thing I'm looking at, look for buy or sell side liquidity to get taken out. So what does that mean, buy or sell side? I'm looking for highs or lows to get swept. So on the 1 hour, remember we were talking about, I'm looking at this high right here to get swept. Boom, we're sweeping and we closed below. There's another checklist. Check that off. Once liquidity is taken, we want to see an impulse move creating a break of structure. Remember, after the higher time frames, you go down to the 5-minute time frame. That is the other time frame that we use. We use the 1 hour and the 4 hour, then we go down to the 5-minute, then we like the 1 minute or the 3-minute for our entries. So, you see the break of structure, right? You see the break of structure. Then what do we look for? Once we see the break of structure, realize if the support and resistance is breaking. Is the support and resistance breaking? Support, 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 support. Boom, break. It broke. It broke all right. Then we look for the 9 and the 21 EMA to cross. I'll go over that after this. Once the EMAs are crossing, you look for your fair value gap. Oh, retrace to a fair value gap right here. Downtrend. Place your physical stop loss, mark out your TPs. Once I see everything come together, I enter without hesitation. Guys, I do this shit every day. We'll go through psychological stuff, and I gotta head out. I have a meeting. It's already been an hour. So, EMAs, you're right, I got you. So for the EMAs, what do we look for with the, what the farkin? What is that, bro? Yo, the people dropped from 170 to 100. Good. That's good. That's showing me that they don't take their life serious. I don't care. Why do you think the lives get better and better and better? I give the boring information at first on purpose, bruh. On purpose. Think that I'm going to start off with the best stuff? Fuck no. Because those 70 people, 60, the people that left, are the people that I don't really care for, respectfully. Unless they have work right now, or unless they had to leave, then it's different. I'm talking about the people that left. Simple. So, the EMAs, I deleted them on purpose so I can go. Everyone, if you're watching this video, or right now, if you're on your chart, you don't have to fiend to do it. It's not crazy important right now. It's the weekend. Just get it done. Go to indicators. What you need to do is you need to put on 2 moving averages exponential, exponential moving averages. You saw me do it. Just rewatch the video. I'm not redoing it. EMA 9 and 9. You'll go to 1. 1 will be 9. 1 will be 21. So you'll click it. You'll go to inputs. The length needs to be 21 for 1. Brother, how many pictures are you going to send in here? Fuck. Come on, cuz. 1 is going to be 9 length. 1 is going to be 21. That's the only setting that I do. I think this strategy is absolutely in-fucking sane, and not a lot of people use it. It's insane. Sound gone? You guys can't hear me? Cap? Okay. No sound. Trolling? Okay. 1's the 9, 1's the 21. Put your 9 to one color. I like mine being green. And then the black is the boom. So I put the 21 to black. I put the 9 to boom. Okay. So this is what your chart's going to look like. Let's delete everything. This is what your chart will look like. So, what is the 9 and the 21 EMA? Their exponential moving averages, basically what I like to define them as, is it is an indication of the trend. It is telling me when we're going to have a reversal. So it's like basically another break of structure, another break of resistance or support. So, Discord tripping. Bro. Shit bugging. You guys hear me now? We're good? Sorry, YouTube, if you're watching this. I don't know why people troll. Like, your dick is probably 2 inches, my guy. Gotta be gay. Alright. Sorry, YouTube, if you're watching this on YouTube, people are trolling in the chat and saying that they can't hear me. Alright, Vincey. My boy. You sound like 19 pictures. We don't care about your camera roll, brother. Fuck. We'll flex into the Discord, like. So the EMA strategy, basically, when you see the 9 cross below the 21, that indicates a downtrend, vice versa. When you see the 9 cross above the 21, it's a fucking uptrend. So when the 9 is above the 21, it's an uptrend. When the 9 is below the 21, it's a downtrend. Now, is it that easy? Just fucking go on a downtrend with the EMAs crossing? You know what I mean? Like, come on. It's that simple. And obviously people are chatting and not paying attention again. It's funny. I can't wait to work with the good people. My bull's getting kicked. I don't even care. See ya. You said the 9 above 21 uptrend. Yes, exactly, Max. Thank you for paying attention, brother. I appreciate it. So, when the 9 is above the 21, it's an uptrend. When the 9 is below the 21, it's a downtrend. So, what we use these for, we'll usually see the liquidity sweep, the break of structure, and the retest. When you see, okay, the EMA's crossed, also, you look at this as a retracement. So, you see how it retraced to the EMAs and it bounced off of them. It straight bounced off of the EMAs. You can enter off of this. Stop loss down here below these fair value gaps, however much you're willing to risk. Boom. Easy trade. Because you saw the EMA's crossover, you saw the fair value gap, you saw the liquidity sweep, you saw the break of structure. Everything looks very, very good. So, that is the 9 and the 21. I can't do risk management today. Can you explain VWAP? I don't really use VWAP anymore, man. But basically, let's go over a little bit of psychology and let's go over Q&A. So I will actually we'll do the Q&A right now. I'll get the chat and put this on the YouTube video. Ask me some questions about psychology and about problems that you are having at the moment and what you need to fix. As simple as that. Do you use fundeds? No, I do not. I use my own capital every single day when I trade. Chris, the 21 EMA is a golden for a pullback, man. I love it. Smoking. So, I do not smoke anymore. I think smoking is for losers if you're smoking every single day. Every once in a while can't hurt you, but if you're wasting your time smoking weed, especially with the bad people, you will absolutely not get anywhere. Also, let's say you have friends that are smoking weed. If you have a bunch of friends that are smoking weed, they're not your real friends if you're only hanging out with them when you're smoking. Do you realize that? The only way that you are hanging out is to smoke pot, to smoke weed. They're your pothead friends, bro. They're your fucking fried ass friends. So, if you clear those friends out, are you going to smoke? Probably not. And it'll help you. Get those friends out that only smoke. They're only in your life and they're only hanging around you to smoke. That's what potheads do. If you hang around potheads, you'll be a pothead. You hang around yourself or you hang around fucking rich people, you'll be rich. Oh, well, I don't have any rich people to hang out with. Yeah, guess what? Hang with yourself then. Be lonely. This shit sucks. It sucks not having friends, but it builds you as a fucking man, bro. It builds you. I got you, Swerve, and I'm teaching for free, man. I'm just trying to help out. I feel attracted to men, bro. I don't know how to stop. Exactly. Once he quit weed, it stopped. What if you smoke weed to get rid of your emotions while trading? That is retarded. Trading on FOMO ruined me. Exactly. When you have FOMO, when you have fear of missing out, it's going to hurt you very, very bad. You should not get FOMO. I'm having FOMO right now, basically a little bit, but I'm controlling myself because I have discipline. I have people asking me to go out and drink, and I'm not, and I'm sitting here right now because I have discipline. You need discipline. How do you actually walk away when you are taking a loss in your trade? Because I have rules and I have goals in life. I want to be rich. It's this simple, brother. I want to be rich, and for me to be rich, I have to listen to my rules. What is my rule? 1 trade a day to 2 trades a day. Why would I go against my rules if that's not going to make me rich? It's that simple, brother. Know your goals and have a why with why you're doing this. How do you stay consistent after losing back to back to back? Trusting the process and knowing your why, knowing your goals. Why did you get into this in the first place? Okay. There's your why. And then also, you have goals, right? You know that losses are a part of trading, so you just need to keep learning. And you need to figure out why you're learning. You need to be aware first. You need to be aware of your problems. It's as simple as that. What time frame for the EMAs? All of them, but for entries, I like the 1, the 3, and the 5 minute. Basically the 5 minute though, or the 1 minute. Hell yeah, Rye. Love it. Love to see that, man, for real. How to build trading discipline more. You need to be disciplined in your real life. You need to set goals, you need to set habits, and you need to work very hard. Remember, brother, habits are a very crucial thing in life. You need to have good habits, and you need to take action. So guys, listen very, very closely. The first thing you need to do is you need to have a thought, but not forever. You don't want to just think, you don't want to overthink, and you don't want to just think more than you do. So first you have that thought. What do you do with that thought? You take action with that thought. Now, after action leads to habits. And what happens when you make good habits? Habits lead to lifestyle, lead to success. So first you have a thought, then you take action, then you have habits. Having good habits will continue to bring you the lifestyle you want and continue to make you successful. I'm on a G of shrooms right now, and it's helping me lock in. There you go, brother. I took shrooms 3 weeks ago. Finding an income or getting 9-to-5 trade. Yes, you need a 9-to-5 job, or you need some sort of income to trade. Did you say I stopped smoking this? There you go. Yeah, stop smoking. What is FOMO? Fear of missing out. Does your strategy have a name? Smart money concepts with a little twist on it, though. So it's basically smart money concepts with the 9 and the 21 EMA strategy. How do you stay consistent after losing back-to-back? I went over that, bro. You just need to have a why, man. You need to know why you're doing this in the first place. You need to be so freaking dedicated to your goals, and you need to do whatever you need to do, and you need to stay happy. You need to stay disciplined. You need to stay locked the fuck in, motivated, disciplined. You need to stay dedicated. Every word around that fucking area forever. Because if you're not happy, if you're not positive, if you don't have good energy, you're not working towards something, then you're fucked. Because guess what? Let's say you get in your car every single day and you just start driving. When are you going to get to an end destination? Never. You're just going to drive. You get into your car without any direction in life. You will end up at an undesired fucking spot. So if you get into your car, have a plan, you have steps, you have direction to where you need to go, you will get to the end goal. It is simple as that, brother. It is simple as that. You need steps, you need plans, and you need fucking goals to get to your end destination. Smoking weed, tobacco is dumb. Yeah, breathe fucking air. Stop being gay as fuck. I smoke cigars. I don't inhale that shit, though. And I look like a fucking pimp while I'm doing it. What was the turning point that made you fully lock in when everything was starting to go wrong in my life? I don't like to explain my story too much, but I didn't come from anything. I came from fucking living in a very, very small town, ghetto town, single mom. Dad was never in my life. He's a drug addict. I have no clue where my dad is, and I'm not sad to say that. I really could care less. My mom passed away when I was 15 years old a couple years ago. I have a little brother, and I have no family. I really don't. I have nothing in my life. I have grandparents. That's about it. And they make average money. They make $60K a year. They are normal people, and I don't have any family. I don't have cousins. I don't have any of that stuff. So if you have a mom, if you have a dad, if you have a big family, cherish that shit and take that in and do it for them, because I'd do anything to go back to giving them the world, bro. I didn't grow up with anything. I remember fucking when my mom was a single mom and she raised me and my little bro. I have a little brother. I remember that we had no food. We had EBT, food stamps. Some of you guys probably don't know what that is. It means that when you're so broke, you get fucking money from the government, right? Not saying I'm anyone special. I'm not saying I came from the mud. Most of you guys don't even know that. I don't tell that to everybody. I don't fucking flaunt that. So I appreciate that, Jackson, deadass, bro. But I just do this stuff because of what I went through. I had so much bad shit into my life, and so much bad shit happened to the point where, like, what do I do? Do I sit here and be depressed as fuck? And do I waste my time? Or do I change my fucking life and realize that you need to focus on the things that you can control, and you need to stop focusing on the things that you can't control? So if that girlfriend's breaking up with you, if she doesn't like you, if someone passes away, if you crashed your car and you're so worried about it, man, you can't control those things. You need to stop overthinking, and you need to only think about the things that you can control, because if you're steady thinking about things that you can't control, it only makes sense. Remember, brother, you can't control those things. So why are you thinking about things that you can't control? Right? Simple. It's that simple, man. So you need to lock the fuck in. You need to do what you need to do. And you need to have a why, right? My why does not matter to any of you guys. Yes, I know you guys thank me. I know you guys fuck with me. But remember, my why is for me. And I'm doing what I have to do for me, for my family, and for my reasoning on why I even started this. And my why, I don't know if you guys have strong whys. I appreciate that, Mac, for real. I appreciate it. But my why is literally because of all the bad stuff that happened in my life. And I was tired, I was depressed, I was fat as hell. Like, I'm not joking. This is right after my mom passed away, bro. It sucked, bro. Where's the fucking announcements? This is like my room right when I moved to my grandmom's house. Where's it at? Right here. Dog. Look at me, bro. Look at me. I'm not scared to show this. I don't give a fuck. I'm proud. My abs are starting to come in, bro. What? I got no butt, fat as hell, titties. Look at my clothes, bro. You guys think I came from something? You think I came from something special, or I was rich growing up? Bro, I got LED strips on my lights. I got fucking I was sleeping on it. Bro, I don't like when people fucking feel bad for me or anything. I don't care about any of that stuff. That's in the past. Can't see? How do I screenshot on here? How can you guys not see, bro? How do I screenshot? Or copy and paste? I don't know. Go to the announcements, though, bro. Like, it's there. It's fucking... Look at the shot. Post it in the chat. I'll post it in the chat. Okay, there you go. Bang. Like, fuck. Damn, bro. No, I gotta delete that. No, I'm just kidding. I don't even care. Like, yo, I leveled the fuck up. I'm in the gym every day. I lost over fucking... I was way bigger than that, too. That was when I first started to get fat. But that was right after. Like, I fucking blew up, and I changed because I have a why. That was literally around the worst time of my life where I was depressed, bro. Depressed as hell. Depressed as hell. Shitty mindset. No bitches on my dick. Like, that doesn't matter, but still, bro. I was getting no butt. That shit's ass. You feel me, bro? So, that's just a little bit of psychological stuff. I'm ending the YouTube video here. If you're at the end of this YouTube video, peace out. It's an hour and 50 minutes long. I hope you learned something from this. Deuces.